All right, let's dive into a real head scratcher today. We're not looking at some big market trend, but instead, we're going deep into the fascinating and frankly brutal technical story of just one stock, Healthcare Triangle, ticker HCTI. To really get this story, you have to start with this one number, $218.12. Picture this. Just 1 year ago, that was the peak price for a single share of HCTI.
And its price, as of this analysis, a little over 30 cents.
I mean, that is a staggering drop of 99.8%. So, two big questions are driving our investigation. How on earth does the stock collapse that completely? And maybe more importantly, what clues, if any, are hiding in the wreckage of its chart?
Okay, so like with any good mystery, you have to start by establishing a timeline. So let's take a look at the context of this shocking collapse. The stock's journey over this past year has been, well, nothing short of catastrophic. From that peak, way above $200, it just began a relentless decline, bottoming out at just 25 cents. It is now firmly entered what we call penny stock territory.
So if we were investigators arriving at the scene, the first thing we'd see is just overwhelming evidence all pointing in one direction. Let's examine the case for extreme caution. You can see the devastation really clearly when you look at the averages. The current price isn't just low, it's buried far below every major historical marker. Trading at just a tiny fraction of its 50-day and 200-day averages, the chart basically confirms this has been a severe long-term downtrend. And the other trend indicators? Oh man, they're basically screaming danger. The ADX score shows this wasn't some gentle drift down. Nope, it was a very strong, powerful trend. The Arun down indicator, at 96 out of 100, tells you the stock has been making new lows relentlessly. And finally, the parabolic SAR, which is designed to spot trend direction, is still flashing a strong sell signal. All signs point straight down. But just when the case seems completely closed, our investigation starts to uncover some surprising clues, subtle hints that a different story might just be starting to unfold. Let's look at the clues for a potential comeback. Now, to understand these clues, you first need to get this concept. Oversold. Imagine you're stretching a rubber band. When a stock's price gets pushed down way too hard and way too fast, it becomes statistically stretched. The selling pressure gets so extreme that it's actually more likely to have a corrective snapback, a rebound. And this is where we see just how stretched that rubber band really is. The Relative Strength Index, or RSI, measures that selling pressure. Anything below the 30 line is considered oversold. HCTI's RSI is way down at 19.28. This suggests the sellers might finally be running out of steam. Then you have this. This is a critical piece of evidence. On January 29th, over 128 million shares of HCTI were traded in a single day. For a stock like this, that is an absolutely colossal number. So what does a volume spike like that even mean at the bottom of a crash? Well, it can signal a final washout. It's what traders call a selling climax, that final panicked moment where every last seller just gives up, potentially leaving nobody left to push the price any lower. And finally, here's our most subtle clue. A bullish MACD crossover has appeared. This indicator tracks momentum. Now, it's still deep in negative territory, but this little crossover hints that the downward momentum is starting to weaken, giving us a very early, very faint signal of a potential shift in sentiment. So we've got all this conflicting evidence, a terrible trend, but also some clues of a potential bottom. This is where strategy comes in. Traders make sense of all this by decoding key price levels. For traders, the whole story now really boils down to three numbers. First, you've got the support floor at about 25 cents. That is the absolute line in the sand. Second, the pivot point at 32.5 cents. That's the first hurdle for any kind of recovery. If it can clear that, the next target for a technical bounce is up around 45 cents. Okay, let's bring all this evidence together. The good, the bad, and the ugly, and lay out the final verdict. So here are the two competing theories. The bull case rests on the idea that the selling is just exhausted. The stock is extremely oversold. We saw that potential selling climax with massive volume. We have that tiny glimmer of hope from the MACD. But the bear case is powerful and it's simple. The long-term trend is a total disaster. This is a highly speculative penny stock, and that primary downtrend is still technically intact.
So what's the ultimate takeaway here? Well, the analysis shows this stock has a beta value that's pretty much zero. Now, beta just measures how a stock moves with the overall market, and a value of zero means HCTI is completely disconnected. It's moving based on its own internal drama, which makes any trade here the very definition of high-risk speculation. Which leaves us with the final question. We've looked at all the evidence from the charts. Is that massive volume spike a true selling climax, marking the absolute bottom of a historic fall? Or is it just a brief pause in a stock's final tragic chapter? The charts have laid out the clues for us, but only time is going to reveal the answer.